there was then a diversification, but what's your view in terms of how do you give exposure via structured products? Is it still very local, domestic, and is it worth it, or do you see it more as a way to diversify it outside, outside the Nordics markets?
Very good question. I mean, what we've found is that home buyers is extremely strong. It's very difficult to work against it.
Yeah, that's true.
So it's much easier to sell something that's based on a Swedish underlying in Sweden, a Norwegian underlying in Norway, Finnish underlying in Finland. So I think what we've perhaps been a little too keen to use single stock baskets, and I think going back to investor expectations, because when the autocalls were introduced in 2008, volatility was extremely high. You were selling volatility. You were getting huge headline coupons. You do OMX and you get 20% per year. You do RDX, which was popular back then, the Russian index, you get 40% per year. And then obviously you anchor the expectations in that kind of headline coupon. Now you need to produce something that could come close, and that's when single stock baskets were introduced. They worked very well for many years, but now they don't. Look at the UK, for instance. I mean, most of the autocalls have been based on indices, right? So
the IFA market is 95% just FTSE.
Yeah. So and that, over the past 5 years, I mean, that's been fantastic compared to worst ofs where you get very old, nice Swedish industrial companies like Electrolux tanking 80%. Unexpected, but we all knew it could happen. So
Michael, there is a bias, right? And I've studied this. I've done a lot of research on this. I even did behavioral courses to study this, and I did study both a lot of analysis on data, and there is a bias from investors to reinvest at the same coupon, the same headline rates, which makes your life more difficult, right? Especially when you mention, well, you can get the same coupon here, but you're taking more risk. How do you handle that, or it's not really possible?
I think it doesn't. You need to handle it, and you need to be, an educator vis-a-vis the client, because terms change, and they change radically when market conditions change radically. And that's not always obvious for the client, but we have very good examples. Just going back just 20 years, we have several crises and a lot of different market environments that we can use to exemplify. And, this structure works very well here, but it doesn't work so well in this type of environment. What we believe the next 3 to 5 years will be, similar to this. So that's why we should be doing this. So it's almost, taking them to school and explaining these things. It's not that difficult once you have the charts and the data. It will be easy for them to connect the dots.